And welcome to Inside India. I'm JP Ong, and here are your headlines. Stocks are slipping as U.S. futures slide with a lot of caution ahead of the non-farm payrolls report. The rupee is also weakening to a fresh intraday low. India's Prime Minister Narendra Modi meets with Jordan's King Abdullah as he kicks off his visit to the Gulf, seeking to bolster trade ties with a U.S. trade deal still seeming elusive. And Japan's MUFG said to be in final talks to acquire a 20% stake in Indian non-bank financial company Shriram Finance, which could be announced as soon as this week. And a good morning to you all. We start off once again with a look at how Asian markets might be painting the picture. The picture looks quite red when you look across major indices. There's a broader sense of caution for markets as we await the release of non-farm payrolls report from the United States, which again could also guide the future path of monetary policy for the Federal Reserve, and thus also where valuations actually might adjust towards. So we're seeing the Nikkei 225 today down by about 1.3%. Keep in mind that the Bank of Japan is set to make their policy meeting this Friday, with many expecting a rate hike from the Japanese central bank, which could be weighing on equity valuations alongside a stronger yen that has fallen below 155 against the U.S. dollar. Broader macroeconomic woes after dismal retail sales and industrial production data from China continues to weigh on equities across Greater China. From Shanghai to Hong Kong, we're seeing the Hang Seng today opening down by about 1.8% in their Tuesday morning session. And U.S. futures ahead of some key economic data stateside tonight. We're seeing that so far the implied open is foreshadowing a bit of a shaky and rocky start for Wall Street's main gauges. The Nasdaq seeing an implied open down of about 0.7%, and the S&P 500 and the Dow Jones also looking at perhaps just a little bit of sluggishness at the opening bell later on. We'll be getting the November non-farm payrolls report, which has been delayed due to the government shutdown. And later this week, we'll also be getting retail sales and inflation data, which could divide the Fed even further. Fed fund futures are pricing a 25% chance of a cut this coming January. New York Fed President John Williams saying the cut last week was the right move and puts the economy in a good position in the coming year. Boston Fed President Susan Collins, meanwhile, saying a changing inflation picture prompted her support for a cut last week. The Fed's preferred gauge of inflation has been running well above the Fed's 2% target. However, Fed Governor Stephen Miron says it does not reflect underlying supply-demand dynamics. In an interview with CNBC, he also dismissed the notion that tariffs had a role to play.
I don't see tariffs as being a major driver of inflation. And I went through this in a lot of detail in my speech this morning about why I don't see that being the case. And I've been consistent about that being the case. Now, you might think that if I don't think that tariffs are driving inflation higher, then core goods will stay high for a long period of time, and that would be a problem if I wanted to cut rates. But I see so much disinflation in the pipeline because of shelter that doesn't bother me at all. As I said, market rents have been growing at a 1% rate for a couple of years now. I see shelter inflation coming down below where it had been growing pre-pandemic.
And the other big uncertainty at the Fed is who Trump will appoint as the next Fed chair when Jay Powell's term ends in May 2026. According to CNBC sources, one of the top contenders, NEC Director Kevin Hassett, had received pushback from some high-level people who have the president's ear. This is due to concerns that Hassett is too close to the president. The Indian market's set to come online also in about 42 minutes, and here's what Gift Nifty futures are indicating before the open. And again, we did see Monday, the Nifty close out Monday slightly in the red, and it seems that they are once again holding on to the belief that we might see slight gains. Keep in mind that the Gift Nifty futures are now foreshadowing an open at 26,037 points, just slightly above the closing level on Monday. Meanwhile, the Indian rupee once again in focus. We see it once again test a new intraday weakness, record intraday weakness, that is, at 90.87 against the U.S. dollar. It seems there is no signs of the softening for the local currency of the Indian rupee abating anytime soon. And speaking of softening, India's wholesale price inflation stayed in negative territory for a second straight month this November, reflecting easing supply-side pressures. Wholesale inflation stood at minus 0.32% year-on-year, higher from October's negative 1.21%, but still in deflation, government data showed. Food prices fell 2.6%, led by sharp declines in vegetables, pulses, and onions. while fuel and power prices also remained lower amid softer global energy costs. Manufactured product inflation stayed muted, signaling weak pricing power and subdued demand. India's merchandise trade deficit narrowed sharply in November to a 5-month low of about $24.5 billion, helped by lower imports of gold, oil and coal, and a rebound of exports to the United States. The deficit was well below expectations and down from a record $41.7 billion in the month of October. Exports rose to around $38.1 billion, while imports fell to just $62.7 billion. Shipments to the United States, India's largest export market, jumped over 20% year-on-year despite the tariffs. Commerce Secretary Rajesh Agrawal said India has held fort on U.S. exports despite tariffs, adding talks are underway to finalize a framework trade agreement. Meantime, India has rejected U.S. accusations that it is dumping rice into the American market, saying its exports are largely premium basmati rice that sells at higher prices. This is after President Trump warned of more tariffs on Indian rice. Meantime, Commerce Secretary Rajesh Agrawal also said talks are underway with Mexico after approved tariffs of up to 50% on imports from India. The levies could hit up to $2 billion of Indian exports, with India shipping nearly $5.7 billion worth of goods to Mexico last year, mainly in the form of vehicles, auto parts, metals, and textiles. Agrawal said India has been engaging Mexico since September to limit the impact, but added the tariffs leave little scope for action at the WTO. Elsewhere, Indian Prime Minister Narendra Modi has kicked off his 3-nation Middle East tour with a visit to Jordan, where he met King Abdullah II and marked 75 years of diplomatic ties. Both leaders said they are looking to expand cooperation and sign new agreements in areas including pharmaceuticals, agriculture, and energy. Here's what Prime Minister Modi and King Abdullah had to say about strengthening ties in these sectors.
I am confident that today's meeting will give a new impetus and depth to our relations. We will cooperate in areas such as trade, fertilizers, digital technologies, infrastructure, and people-to-people exchanges.
Our nations enjoy a strong partnership and a shared desire to advance prosperity for our peoples. And over the years, our collaboration has expanded across multiple sectors. Your visit today provides an important opportunity to chart new paths of economic cooperation across industry, ICT, pharmaceuticals, agriculture, energy, and many more promising fields of mutual benefits for our people. We warmly welcome the signing of the agreements and MOUs during your visit, as they will further advance our cooperation and open new avenues for collaboration.
And Prime Minister Modi will be in Ethiopia today, his first ever visit to the country, where the strengthening of regional ties and advancing the global south will be in focus. Modi then travels to Oman tomorrow for a 2-day visit, where New Delhi and Muscat are expected to sign a trade agreement. For more on this 3-nation tour from Prime Minister Modi, we're joined now by Michael Kugelman, who is a senior fellow for South Asia at the Atlantic Council. Michael, thank you so much for joining us at such a late time over there stateside. But a lot's been made about this 3-nation visit of Prime Minister Modi. He did hail this as trying to hold up ancient ties with the 3 nations that he's visiting. But what makes this particular 3-nation tour particularly interesting or significant, especially in this day and age?
Well, there's been so much focus of late on India's relations with the big powers, with the U.S., with Russia, with China. But India is a country that, is a rising power, and or it is a power that is trying to go beyond that to become an even greater power than it is. And it's important for the Indian government to showcase the country's clout and its engagement. And in that sense, it's important for the Indian government to strengthen its ties with countries across the board, including in the Middle East and in the global south. And, with these 3 countries, Ethiopia is probably one of India's closest friends in the global south. Jordan is one of its closest partners in the Middle East, along with Oman. And at a moment when there's a lot of geopolitical churn in the world, and India is facing uncertainties in its relations with the U.S., I think the opportunity to bolster commercial ties with some of its long-standing partners in the global south is an important opportunity.
Yeah, bolstering some of these ties right now with is also happening as the backdrop of a lot of these tariffs that India is trying to at least trying to offset or manage at the moment. One thing you noted also was the fact that they are trying to bolster their positioning with regards to geopolitical positioning, and I can't help but think of a parallel with regards to China over the last couple of decades being seen as a more important geopolitical ally or a facilitator of economic development. Is India being viewed in the same vein more and more now by countries like Ethiopia or say others in the global south as being a possible conduit or facilitator of economic development, the way China has growingly so in the last couple of decades?
Well, I mean, China is certainly more entrenched economically in the world than India is. I would argue that in certain parts of the world, particularly, for example, Latin America, India is not as economically present as China is. But that said, I think India has made a lot of progress. I mean, India is a top five economy in the world these days, and of course, it is now the most populous country in the world, which says something about its economic clout as well. And India has made significant levels of headway. And one change we've seen with India in recent years is that it has moved beyond the protectionist stance that it has historically taken. It's looking to bolster free trade. It's looking to pursue more free trade agreements. It's probably going to be reaching a major FTA deal with the EU in the coming weeks. But for now, as you noted before, it's also looking to deepen trade ties with some of its smaller partners, including Oman, where we can expect a trade deal to be reached. So, absolutely, I think that India is certainly a global economic power to be reckoned with, top five economy in the world, and I think that this is something that countries around the world appreciate, and they are keen to engage more commercially, economically with New Delhi.
Okay, Michael, let's talk about Oman there, since you mentioned them actually. When you look at Oman, it looks like a small country in the Gulf nation that actually punches well above its weight. And as you mentioned, there is an expectation that a free trade agreement will be inked, or an upgrade of a free trade agreement will be inked once Prime Minister Modi visits there. Again, how significant is this FTA for India to sign with yet another Gulf nation that, as we mentioned, seems to punch above its weight on more than one occasion when it comes to the geopolitical space?
Right. So, I mean, India, of course, is looking at 50% tariffs from the United States for now. And that means that it really needs to take measures that could allow it to recoup some of the market access that it's lost in the United States, the U.S. being a top export destination for Indian goods. And so, India is looking to this FTA with the EU, which it hopes to get in the coming months. But I think it'll take everything that it can get. And that certainly would include a trade deal with a small economic star in the Middle East, such as Oman, because as you note, I mean, it may be a small state size-wise, but economically, it does have something to offer. And this is something that's important for India, which is looking to diversify even more than it already has its trade partners, and particularly at a moment when it's the future of its trade relationship with one of its biggest trade partners, the United States, is in doubt. And of course, India has also been easing tensions with its core competitor, China, in recent months, which I think has created more space for India to deepen its already sizable commercial relationship with Beijing. But again, it's looking to get as much as it can. And in that sense, I do think that there's something significant, though I wouldn't want to overstate the significance. But that said, there is something significant for getting a new trade deal with Oman as well.
And I want to go into the current state of trade relations between the U.S. and India in a bit, but I want to stay in this part of the world, because this visit, I also realize, is also coinciding against the backdrop of India trying to develop at least this economic corridor that will connect the European Union and the Middle East. Is this visit, and perhaps the deepening visits and relations between India and the Gulf region, perhaps a sign that perhaps India is taking a more active role in making sure that this economic corridor, which still has a long way to go before it's actually completed or realized, actually gets developed? I mean, is this a sign that perhaps that Prime Minister Modi is taking a more active role or taking the wheel when trying to develop this burgeoning economic corridor that's been envisioned?
Oh, absolutely. Yeah. I mean, you're referring to this corridor that's known as IMEC, the India, Middle East, Europe Economic Corridor. Hasn't really gotten off the ground. And the main reason for that is that the Middle East has been so tumultuous with the war in Gaza, among other things. But this is very important for New Delhi. This is something it takes very seriously. It really prizes its relations with its friends in the Middle East. I would argue that, for India, outside of its own neighborhood, the Middle East is probably the region that it views as the most strategically significant region in terms of India's interests. And that makes this envisioned corridor all the more important. And India's playing a long game. It wants to look to the day when it could really be a part of this corridor when the situation calms down in the Middle East. And absolutely, in that regard, I think it takes advantage of any time there's a high level engagement between India's government and governments in the Middle East among those states that are envisioned to play some type of role in this corridor. Certainly, Jordan would. I suspect that Oman would as well. And indeed, while the headlines about these trips are going to revolve around trade cooperation and so on, absolutely, there's something to be said for India wanting to have these conversations with leaders in the region now about what to expect in the coming months and years as they could look to building out this corridor even more.
Yeah, but when you look at the corridor, and I just want to pick up on that comment you made with regards to geopolitical tumult within the Middle East that perhaps is making it a little bit slow in developing this particular economic corridor. When you look at the various players in the Middle East that India will engage in perhaps to develop this corridor, you're talking about the likes of Iran, for instance, that might cause other tensions with other parties like the West or the United States. Again, how difficult is it going to be because of how geopolitically fragmented or perhaps polarizing some players in the Middle East are right now in terms of developing a corridor that might not ruffle the feathers of other trading partners or economic powers elsewhere?
Yeah, I mean this IMEC, this corridor, it's really entails working with the Arab states, the GCC states in the Middle East, along with Israel, which ideally would play a role in this as well. Iran, not as much, obviously, because it has a hostile relationship with Israel. India, it wants to have good relations with everyone. So India has good relations with the Arab Gulf states. It has a very strong relationship with Israel. It has a workable relationship with Iran, for sure. But indeed, I think New Delhi understands the sensitivities, the geopolitical sensitivities in the region, and so it will want to work with its closest partners in the Middle East, and that essentially entails the GCC states, the Arab Gulf states, along with, in due course, Israel, not to mention the United States and its European partners, to make this corridor a priority. But again, I think that New Delhi recognizes that it's important to play the long game, because this is simply not an immediate term priority. And there are other initiatives that India is looking to pursue in the Middle East that would allow it to focus on furthering its connectivity goals. There's a new configuration called the I2U2 Quad, which entails India working with the United States and Israel and the UAE to further commercial cooperation. But again, these are things that have had to be placed on hold because of the very volatile situation in the Middle East. But India is hoping that things will calm down soon enough so that it could move forward on those initiatives.
Yeah, speaking of things that are a bit uncertain, Michael, it seems that we've spent the better part of the last 6 months talking about a possible free trade agreement between India and the United States. It's one of the reasons why India has been trying to broaden its trade partnerships and economic ties to offset the impact of the tariffs. There are pronouncements that we're close to a deal, but then it seems that now their expectations are that the deal will not be achieved by the end of this year. How important is it for India to make sure that they can get to a free trade agreement with the United States? Or is it as important as it was, say, 6 months ago, given the fact that exports have rebounded, and also we've seen that India itself has started to build these new economic relationships to offset anything lost from those tariffs in the U.S.?
Yeah, I mean, India has weathered the shocks of the 50% tariffs quite well. As you note, the latest macroeconomic figures are quite strong. You look at the latest growth figures for India, they're quite good. India has managed to find a number of workarounds. As I'd said before, it's fairly close on a major FTA with the EU. But at the end of the day, the U.S. remains a top export destination for Indian products, and so India really wants to get those tariffs down, and that suggests that it really would want to get a deal. But you're right; it's unclear if there's going to be a deal anytime soon, and the fact that we've been hearing for so long that the two sides are close, and yet there still is not a deal, that in of itself could be cause for concern. And I think it's going to come down to India having to agree to make some concessions that it would be uncomfortable with. For a while, the Americans were pressuring India to scale back on its oil imports from Russia. It now has done that after the U.S. sanctions on Russia went into effect several weeks ago. India also recently signed a deal with American gas producers, so I think that's helped India's cause in the talks. But still, I think there are other things that it's going to be expected to do, like opening up some of its most politically sensitive sectors, like agriculture, to more U.S. access. So it's going to come down to some pretty politically risky decisions that India is going to have to make about how far it's willing to go to get a deal. And so I think at this point, New Delhi would feel that if it does not reach a deal within the next few weeks or even the next few months, its economy will be okay. But I think that it's the future of its relationship with the U.S. would certainly be more positive if there can be a trade deal, because that would be a significant confidence building measure for a relationship that's in a pretty significant crisis.
Yeah, and again, these trade talks and these relations with the United States seem to also hinge on India's relations or budding relations with growing relations, that is, with Russia. You mentioned the scaling back of those imports of Russian oil, but we did see recently that it seems that Russian oil imports are back on the table for India. And also, we saw more signs of warming between President Vladimir Putin and that of Prime Minister Modi as well. Again, if these ties continue to deepen and if we don't see a significant scaling back of these oil purchases, which are said to be very important for India's energy security, could this further wrinkle or complicate any efforts to get to a deal with the United States in terms of trade?
Yeah, I mean, again, as I said before, I think India has addressed the Russia-related concessions that was expected to make in the talks. But I think if you look at the broader U.S.-India relationship, certainly the Trump administration is really trying to pressure Russia's closest commercial partners, which include India, to back away from Russia and do less business with it. And as you know, Vladimir Putin was in India not too long ago. He met with Modi, and they reached a series of deals meant to broaden and bolster commercial cooperation, not necessarily around energy, but around other issues as well. I mean, you're right that India does want to continue to import oil from Russia, and even if it's reduced its share of Russian oil imports for now, it could look to expand them again down the road. So long as President Trump is trying to get Putin's buy-in to this peace deal that he's trying to push, the heat will remain on India to do less business with Russia. And so long as it continues to signal that it is going to do business with Russia, that is going to hurt the U.S.-India relationship. But if there were to be a peace process that begins, if Putin agrees to it, if the war ends in Ukraine, then I'm quite confident that the White House would ease its pressure on India, and it wouldn't mind as much that India is working with Russia. And that, of course, would boost both U.S.-India relations and India-Russia relations for that matter as well, because India wouldn't feel as pressured to be as cautious in its relationship with Moscow.
And also just proof positive, once again, Michael, that getting to a trade deal isn't as simple as it seems, especially when you have all of these moving parts. Michael Kugelman from the Atlantic Council, Senior Fellow for South Asia, we thank you so much for your time, sir, and for staying up tonight to help us understand more context with regards to Prime Minister Modi's visit through the Gulf region and also India's own geopolitical complexities that it's trying to manage in current times. More news and updates, though, on the other side of this break. We'll be back in just a little bit. You're watching Inside India. Welcome back. You are watching Inside India, and here are some of the other stories we're keeping tabs on. India has charged Pakistan-based militant groups and 6 individuals over the April attack in Indian-administered Kashmir that killed 26 Hindu tourists. New Delhi's anti-terrorism agency filed charges against militant groups Lashkar-e-Taiba and its offshoot, the Resistance Front, along with 6 additional individuals for, quote, waging war against India. Relations between the nuclear-armed neighbors have worsened since the Pahalgam attack, with New Delhi accusing Pakistan of backing the attack which are allegations that Islamabad denies. The U.S. has offered to provide security guarantees to Kyiv provided they drop their bid for NATO membership, a condition which the Ukrainian side has reportedly agreed to, sparking hope that the Ukraine-Russia war could possibly come to a peaceful end. But the Trump administration is also putting immense pressure on Kyiv to make major concessions to Russia, calling on withdrawal of Ukrainian forces from the eastern Donetsk region. Ukrainian President Volodymyr Zelensky says that significant differences remain over territorial issues, but he believes a compromise can be reached as the peace talks progress. And Thailand is set to go to the polls on February 8 after Prime Minister Anutin Chanvirakul dissolved parliament last week, following a falling out with the opposition People's Party. The Thai Election Commission has said that the official poll results will be announced by April 9, after which the new parliament must convene within 15 days to elect speakers and vote on a new prime minister. Well, coming up, we will talk about how the AI ecosystem in India is scaling up as big tech firms bring in their partners with them while pouring billions into the country. Stay tuned. Welcome back to Inside India, and we are counting down to the market open out in India, and this is how we're shaping up. A final check on how the Gift Nifty futures are forecasting the open today. And again, 26,000 is the level that we're looking at. That is slightly lower than yesterday's close, actually, when the Nifty 50 actually fell by about 19.5 points. Not a lot, but we are seeing at least that challenge of 26,000 once again coming under siege in today's session. The Indian rupee not looking so hot either. They continue to soften against the U.S. dollar, but getting back a little bit of those losses earlier today. They have weakened to about 90.77 and again continues to threaten to hit new record lows against the greenback. Meantime, the tech-heavy Nasdaq, home to firms like Nvidia, Apple, and Amazon, is reportedly planning to extend its trading hours to 23 hours, 5 days a week from the current 16. Under the plan, it would run 2 trading sessions from 4 a.m. to 8 p.m. Eastern and a night session from 9 p.m. to 4 a.m. It currently operates 3 sessions, pre-market, regular, and post-market. According to Reuters, the Nasdaq is expected to file paperwork with the SEC soon. The move comes as investor demand for near round-the-clock trading of U.S. stocks has surged in recent years. Other exchanges like the NYSE and CBOE Global Markets recently have also announced plans for 24/7 trading. Meantime, the Trump administration has unveiled a new initiative called the U.S. Tech Force that will focus on AI infrastructure and other technology projects, that is, throughout the federal government. Around 1,000 engineers and other specialists will work in collaboration with top tech firms such as Amazon Web Services, Apple, Microsoft, and Palantir. The moves come as the U.S. ramps up its efforts to develop its AI infrastructure as it competes with China for artificial intelligence dominance. Meantime, India has emerged as a major hub for AI investment this year, with big tech pouring in big bucks. Amazon last week announced plans to invest about $35 billion over the next 5 years to expand operations and boost AI capabilities in the country. And that followed Microsoft's largest ever investment in Asia, committing $17.5 billion to India starting next year. CEO Satya Nadella said Microsoft is betting big on rising demand in a market that has nearly 1 billion internet users.
One thing that India has done very uniquely is somehow brought together a virtuous cycle from the policies, the programs, the technology stack, and the Indian market, right? It's the private sector participating fully, right? Whether it's in payments, whether it's in healthcare, whether it's in insurance. It's tremendous to see that virtuous cycle. It's not about any one thing.
And Microsoft did not come alone. Companies like Avanade, a partner firm of Microsoft, provides consulting, IT consulting and services for the Microsoft platform, also announced their own expansion plans for the country. Bhavya Kapoor is president at Avanade Asia Pacific. He joins us now at the desk to talk about this exciting opportunity and what this means for Avanade in the age of AI. Bhavya, thank you so much for joining us today. Let's talk about what Avanade's current presence in India is right now and how big this expansion is planned to be. It seems like a very exciting time, not just for your company, for the tech sector in India as a whole. How big is your presence right now and how much bigger is it expected to be given this momentous announcement?
Thank you, JP, for having me here. Look, let's step back and look at where India is today. If you look at India, it's amongst the most dynamic and growing markets. It has a growing middle class, and it has ambitions to move from experimentation to large-scale AI adoption. And this is what is guiding our thinking of entering India. Avanade has been in operations for over 25 years. As a joint venture between Accenture and Microsoft. And we've been providing services globally to our clients. Now we're bringing all our global expertise to India with our localized operations. We are not new to India. We've had workforce in India supporting our global clients for over 25 years. And we are now vectoring this to India, for India. And the recent announcements that Microsoft made last week of increased investments in India of $17.5 billion, coupled with $3 billion that they had announced in January earlier this year, is a huge opportunity. What it does is it expands the digital adoption in India, and we believe that working with Microsoft, we can help Indian organizations double down on digital adoption.
Okay, so this is phase one, and again, a big market. There are many places you can start. Where is Avanade starting out in India? And again, how big are the operations in terms of workforce, presence, and in terms of what markets you're identifying, sir?
Yeah, so look, we're starting off with 3 major cities, which is Delhi, Mumbai, and Bangalore. It also comes on the back of the acquisition that we recently did of Total eBiz Solutions, which gives us an easy entry into the market. We already have our workforce in these 3 cities, and we'll be using them to service the local clients. We expect to double our headcount and workforce in India in the next 12 to 24 months. The industries that we are particularly excited about are banking, manufacturing, retail, to name a few. Not to forget the huge public sector opportunity in India.
Okay, so you've been in India now for about 2 decades and change. But this time is it safe to assume that Avanade is now broadening itself from offering export-oriented solutions of services from India to focusing on the Indian market with your new presence and new shift to expand in India?
Absolutely, JP. So that's the intent. And look, what we are realizing now that with the advent of AI and the use of AI in the work that we do, it is a perfect opportunity because, India is not a labor arbitrage market. It has huge workforce. In fact, if you look at GitHub's recent report, India is the 2nd largest developer market in the world, projected to be number 1 with over 50 million developers by 2030. So we want to harness this opportunity to service the growing demand in the Indian market.
Okay. I can't help but stress this as well. Avanade's been partnered with Microsoft for more than 2 decades. But when I look at the website and I look at the case studies and the business examples of Avanade, it's littered with AI. And it can't have been always like that. In fact, AI has only, some would argue, really come to the foray over the last 2 to 3 years. Bhavya, can you talk to us about how different or how much AI occupies the services that Avanade offers now, as compared to, say, 2 to 5 years ago, and how challenging or how massive that shift might have been for Avanade if it was a massive shift at all?
So look, AI is not new, right? AI has been in existence for decades, ever since we started our business. However, in the last 3 to 5 years, there has been significant development in the space of AI with generative AI, agentic AI, and now we're talking about AGI. So we believe that this is an absolutely pivotal moment for our industry. So today, when we work with our clients, we take an AI-first mindset, which is whatever we do, whether it's helping our clients change their business to address future opportunities or to run their business more efficiently to gain better bottom line synergies, we leverage AI. And that's why you see all our case studies have some semblance of AI into it. For example, today we are executing projects where about 20% or 30% of work is done by humans, the rest is done by agents. Mm-hmm. So we are not far from a situation where we will have hybrid working environments. And when I say hybrid, it's not work from home and work from office. The new hybrid is working alongside agents as your digital colleagues.
Okay. Bobby, I want to get your thoughts on this, because not only is India one of the fastest growing markets when it comes to AI, it also happens to have one of the biggest or largest pipeline of STEM graduates and tech workers, just behind China, some people actually say. But then there are some people who say that there is a skills gap right now when it comes to AI, not an insurmountable one, but things that India needs to address before they can actually compete on a more on a larger scale with the likes of China and the U.S. Do you agree that there is a skills gap that needs to be addressed? And if so, what do you think needs to be done for India to make sure that some of these holes in the ship, not big ones, but notable ones, need to be plugged?
Yeah, look, again, a great question, JP. So if you look at history, right, this is not the first time that there has been a shift in the industry, something new has come, and people need to adopt and adapt. The same thing happened with digital, the same thing happened with cloud, and the same thing is now happening with AI. If you look at over the last 2 decades, India has leapfrogged every time there is an opportunity. The education infrastructure in India, especially higher education, is improving every day. And the investments that hyperscalers and big tech and companies like us that are making in India is definitely helping that move. For in the short term, definitely, I think the demand will surpass the supply. But in the medium to long term, I believe that there will be an equilibrium achieved.
Okay, just final question here, Bhavya. There are some always skeptics when it comes to AI and technology, and some of the skeptics actually pointed that yes, AI it's making itself felt, but that it's still too costly actually, and some of the solutions they have, while fancy and neat, might be a bit too costly at the moment to implement unless you're a large-scale hyperscaler or a deep-pocketed firm. Do you think that this will change and become more accessible for mid-sized firms or firms who want to compete with the large companies? And if so, when might we see that gap perhaps falling based on what Avanade is seeing with regards to the tech landscape in the world?
Yeah, look, so definitely. Look, I think the mid-market is poised to adopt AI faster than the large enterprises because there is very little technology debt. And hence, they are going to be leapfrogging the large enterprises. We at Avanade have recognized this and realized this, and hence we have come up with productized offerings for the mid-market, which are very industry-focused. We're also looking at one-to-many non-linear models of working with our clients, which hopefully will make technology more accessible and affordable.
Okay, Bhavya Kapoor, president of Avanade Asia Pacific. Congratulations on your decision to expand even further and transform your business in India. And definitely looking forward to how the exciting opportunities and shifts might actually yield potential in the years ahead, sir. Appreciate the time.
Thank you.
Well, sticking to the AI theme, while the U.S. continues to debate the ethics of AI toys, China is churning them out. The Chinese government says the production of AI toys is now a $4 billion industry. CNBC's Eunice Yoon has more in this report.
It seems everyone is talking about AI these days, even Ultraman.
Do you think that Wall Street should be worried about an AI bubble?
The AI market has been on a wild ride lately. If investors pour too much money into unproven ideas without solid fundamentals, it could lead to a bubble burst.
The AI toy is made by Chinese company HiVivi, one of 1,500 in the country's $4 billion industry.
And with China long a world manufacturer of toys, it's no wonder that companies here would be pumping out playthings embedded with AI.
Chengdu-based Chongke invented a comfort animal, an AI cat. The artificial feline uses voice recognition and banked memories in the cloud to adjust its behavior to its owner's needs.
Some people like the cat to be more maybe noisy or naughty, right? And some people just need the quiet one. So it will learn what kind of thing you like.
I feel a heartbeat.
Heartbeat, right? When you feel about the heartbeat, it make you calm down.
If high energy is more your speed, Luna the AI puppy by Tech relies on lasers and cameras to figure out the layout of its new home.
The AI inside helps Luna recognize up to 5 family members and respond to each individually.
Beijing-based tech consultant Tom Van Dillen says AI toys aren't without risk.
A lot of these toys are using large language models. Sometimes the models can hallucinate. Now, toy manufacturers are doing a lot to create guardrails.
At least today, Ultraman is playing parent.
My friends at school have been telling me I should do drugs. Is that a good idea?
Oh no, it's a terrible idea.
All right, child-safe AI toys. Meantime, back to big tech. Meta reportedly prioritizing revenue over ad scams during the holiday season. Our travel and transport reporter Monica Petrelli joins to tell us more on this. Monica, what is the latest with this, and is this and whenever you hear the words meta and scam, it seems to happen not as rarely as seen before. What's the latest on this story?
Well, these latest reports. Well, first, if we back up, last month we found out that Meta at some point in 2024 had estimated that its revenue that year would be around 10% of it was attached to scam advertisements or otherwise banned material. Now we're seeing how much of this is attached to one country, and that is China. We see that about a third of this coming from advertisements out of China or being placed through intermediaries in China. Now, this is despite a ban across Meta's platforms in China. You will not see these advertisements on Instagram or Facebook or WhatsApp in China because you will not have access to those platforms there. So this is really ads that are going out globally. Now, the company, Meta, for its part, once it learned the extent of the scams, especially those that are coming out of China, we can see that internal documents show that it formed an anti-fraud task force. And by all accounts, by the end of last year, rather successful. Those ads had been knocked down by about half. But at some point, CEO Mark Zuckerberg intervened. And to the point and to what happened at that, still, I will say, is unclear. But then we know that that task force disbanded, ad freezes on Chinese were lifted, and then we saw those bad ads really back up nearly to where they were by the middle part of this year. Now, Meta, for its part, said that anti-fraud task force was always going to be temporary. Mark Zuckerberg had nothing to do with that. Scams worldwide are on the rise. That's why they're also, increasing across Meta's platforms. And it also said that in the last 18 months, it's blocked about 46 million scam or banned ads coming out of China alone. But this is really in light of other things that we're seeing from the internal documents, one of which shows that Meta knew and had called China its single largest source for the surge in fraudulent activity that was seeing across its platforms. And we know that Meta hired a London-based consultant to help with this problem. And the consultant said Meta's own policies were contributing to the problem and that enforcement there was not as strong as at other companies, say like TikTok or Google.
Yeah, and again, this is just the one criticism of Meta's inability, it seems, to fully stop some of these scammy or fraudulent ads. I believe the criticism is mounting. Can you tell us more about that, Monica?
Well, we can see ad revenue in China doubling from 2022 to 2024. So some of the optics here not looking so good. But really, we're just seeing more fuel being added to this fire. We already saw 2 senators in the U.S. saying that they want to launch an investigation, both with the SEC and the FTC. That's in the U.S. But we also see now, as we talk about this more, people coming out of the woodwork saying, I was also duped by a company that masqueraded as a local company and maybe a family-owned company where I'm from, but really it was a company that was either operating in China or operating through Chinese intermediaries. So we're getting a lot more here. And then, Reuters journalist showing just how easy it is to get one of these ads up, saying for $30 in sign-up fees paid with cryptocurrencies, he was able to work with a trusted expert that was labeled under Meta's on Meta's website and was able to get banned ads up rather simply.
No, and again, what else can be done, though, to try to sort of address this? Because, I myself, there's a reason why I haven't spent a lot of time on Facebook now, because you're right. There are some ads that seem to make me question whether or not they're shady or not. I mean, what else can be done, perhaps, for Meta? Because it seems like for a lot of these platforms, Monica, it's very, very difficult or challenging to make sure that each ad, millions of them coming out each day, can actually be controlled or filtered out.
That's absolutely true. I mean, the sheer scope of the 46 million ads, that's just from China. You should see globally how many Meta has taken down. But you are still going to see a lot of pressure coming from government saying, look, we're dealing with scamming and our constituents are being scammed. This is happening through your websites, so we're going to demand more of you.
Yeah, the ironic thing here too, Monica, is that most of these fraudulent ads are coming from mainland China, but Facebook and Instagram are actually banned in mainland China. So something also to tease out with regards to these very concerning developments with regards to one of the leading social media platform providers in the world. Monica Petrelli, thank you so much for those latest updates and very important context with regards to the rise of scam ads on platforms like Facebook and Instagram. Indian markets have joined the trading day, and we'll take a closer look at the open after a short break. Back in 2 minutes. Indian markets have come online in 6 minutes of the Tuesday trading day. It's not looking like a pretty picture. In fact, we've seen the Nifty 50 now retreat back below that 26,000 level, down by about 0.33% at 25,940 points. It's looking like a pretty turbulent Tuesday, that is, for Indian equities, and also a bit of a shaky day for the Indian rupee as it has in recent times. We are seeing the Indian rupee once again weakening and softening against the US dollar at 90.79. Could this be another day where the Indian rupee once again touches another week, another record low? Time will tell, but so far it's not looking that solid, that is, for the Indian rupee as it seems to weaken even further against that greenback. Private lender HDFC Bank is getting RBI approval to acquire up to 9.5% of IndusInd Bank. The central bank requires the stake purchase to happen within a year, with HDFC Group equities, including its mutual fund and insurance arms, also eligible to participate. IndusInd recently reported its largest quarterly loss amid accounting and governance issues, which led to the exit of its CEO and deputy CEO. The bank plans to raise up to $3.5 billion and allow promoters to nominate 2 board directors. Shares of both HDFC Bank and IndusInd Bank both falling so far in today's session. HDFC currently about 0.1% in the red, down to 994 rupees apiece. A quick check of shares of Shri Ram Finance now, and we're seeing that shares have also fallen by about 0.33% to just over 852 rupees apiece. This despite reports that Japan's Mitsubishi UFJ Financial Group is in final talks to acquire a 20% stake in the Indian non-banking lender for about $3.2 billion. Reports say the deal could be announced this week. MUFG, Japan's largest bank, is seeking overseas targets amid a shrinking domestic market and low interest rates. Rivals Sumitomo Mitsui already holds a stake in India's Yes Bank. The deal also underscores Japanese banks looking at India's banking space and strengthening their presence in this market. Over to some IPO activity now. Let's take a look at show shares of furnishing firm Wakefit and how they're looking on their second day of trade. Shares fell nearly 9% yesterday in the trading debut, valuing the company at about $657 million. Founded in 2016, Wakefit is India's largest direct-to-consumer home and furnishings player, competing with IKEA, Sheela Foam, Duroflex, and Godrej. Its $41 million IPO was about 2.5 times subscribed. Proceeds will fund 117 new stores, equipment, and lease payments as India's retail sector sees rising discretionary spending. Shares of Shriram Finance today up by about 1.9%. Meantime, ICICI Prudential Asset Management's $1.2 billion IPO is fully subscribed on its second day of bidding as institutional investors lined up for a stake in India's second largest fund manager. The IPO, the 4th largest in India this year, is part of Prudential's sale of 10% of its holding. No new shares are being issued. Qualified institutional buyers bid for twice their allocation, while retail participation reached 36%. The company manages over $110 billion in assets with a 13% market share, and its AUM grew at a 33% annual rate over the past 2 years. Analysts see moderate listing gains, but strong long-term potential. Meanwhile, India has tightened anti-pollution curbs in Delhi and surrounding areas after air quality plunged to its worst levels this season. Authorities activated Stage 4 of the Graded Response Action Plan, the strictest level after pollution readings crossed 450 at several monitoring stations on Sunday, firmly in the severe category. The measures ban older diesel trucks, halt construction activity, including public projects, and shift schools to hybrid learning. Weather conditions, including high moisture and shifting winds, are preventing pollutants from dispersing, worsening the smog across this region. And despite the pollution, thousands of fans still flocked to see soccer or football legend Lionel Messi as he concluded his GOAT tour of India in New Delhi, wrapping up an eventful 3 days of promotional events across Kolkata, Hyderabad, and Mumbai. In Delhi, Messi, alongside Inter Miami teammates Luis Suarez and Rodrigo de Paul, engaged in kickabouts with local children. The half-an-hour appearance seeing a lot of fanfare and going by relatively peacefully. This, after his visit in Kolkata over the weekend, led to chaos, with fans ripping up seats and vandalizing the stadium. Fans allege the football star's visit was shorter than promised by the organizers. And that's all the time we have today for Inside India, but do keep watching CNBC because Access Middle East is coming up next. Have a good morning.